Tesla stock could break above a critical level, which is just a couple of dollars away this week, which could lead to some massive upside. What are my expectations? What do I think is going to happen? And what do you need to know as a Tesla stock investor? We're going to get into exactly that here in this video. The option activity today, how hedge funds and institutions were positioning in the options market following today throughout the rest of the week and presumably throughout the next couple of months. We're also going to get into some updates on market sentiment, how investors are feeling out there. We have quite a few different things to go over in that regard. The historical trends that we've seen recently, well, historically lead to some pretty fat returns over the next 12 months. And that's exciting, especially for Tesla, because Tesla is poised to outperform the markets big time in 2024. On top of that, we have some economic data coming out tomorrow that I think is somewhat important for you to know. Hit that like button and subscribe to the channel if this is your first time to the channel and the YouTube algorithm has blessed you, or maybe you've been sleeping under a rock and just got connected to internet access. No matter what the reason is. Look forward to seeing you guys here each and every single day. Let's go ahead and jump straight into it. James Cass says a close over $261 will break this multi-year resistance line. And this is something I've talked about precisely over the last couple of months. This is important. If we get above this, then you break out well into the 300s. Probably the biggest sign that this is going to happen is we have a shorter term downtrending line of resistance, the same as this multi-year trend, but it's just connecting from basically July until the last 4 days ago when you broke above this. You were finding resistance here every single time we got here, and most recently you have broke above this, likely signaling a larger uptrend to come. And once you do get above about 261, call it 265 to be a little bit more conservative, to get a clean break and close above this, well, that's where you get into some much larger upside. I think I'm speaking for most of us here. Tesla stock is at the lowest valuation it's ever been at. Sure, EPS estimates have fallen big time for 2023 and 2024, and Tesla's cut prices a lot more than people expected that they would, but that seems to be over. That seems to be old news. We're not seeing any further price cuts on a week-by-week or month-by-month basis anymore. You're actually seeing prices rising in China, which is likely to happen in the US as rates do get cut. What the markets are expecting 6 times in 2024. Just imagine if the economy starts to look like it's heading into a recession. Rates are going to get cut even more than 6 times. And that can open the door for lower monthly payments and Tesla to raise prices, in which I'm firmly expecting they will. That will have a direct implication to margins and help margins dramatically. We also know FSD is likely to enter into the Chinese market in December or January. FSD in China is probably going to have a better take rate than the US, so even though it's likely to sell for a lower dollar amount than the US, it's probably going to sell more units for every, batch of cars that Tesla actually produces, so that will be very accretive to margins and to Tesla's bottom line. We also know that there's record levels of cash out there, specifically record levels of investable cash out there that is underallocated to stocks in a way that we have never seen before. Where are you going to put your money that benefits from interest rates falling? It's not big tech, it's not the Magnificent Seven, it's Tesla and small caps. This is another big reason why I think Tesla is really going to start performing well, let's just call it, over the next coming months. Even arguably the biggest bear on Wall Street for the last 2 years now, Mike Wilson, says what I just said. Small cap stocks might be appealing. He says, quote, "Over the past month, we've experienced arguably the best stretch of breadth improvement in 2023. This is an encouraging sign. Small caps likely look compelling, given higher probability of accommodative monetary policy." What's interesting here is Mike Wilson, arguably, again, the biggest bear on Wall Street over the past 2 years, is starting to flip. but not everyone else has. The average consensus on Wall Street is not buy small cap stocks. Although it's shifting to that narrative, you're in the very early innings. What does that mean? In English, just straight English here. Small caps probably can rally from here. Why are small caps going to rally? Because they're interest rate sensitive. Why wouldn't Tesla rally harder than small caps? There's no argument to that. Not to mention, next year, 2024, is a re-election year. This is the average re-election year since 1956. No, after a robust start to the year, the Q1 period tends to end with a meaningful correction. But what tends to happen is you really start to see an outperformance around mid-year, July, August, into the election itself. Now, history doesn't always repeat itself, but it tends to rhyme. This I would take with a grain of salt. It's just showing you historical trends of what tends to happen during re-election years. But what also could be notable here is one of the stronger rallies you tend to see during re-election years is actually from the start of the year, from January 1st through March, which if that happens again, well, Tesla stock could well be into the 300s. Now, just 1 month after setting a 2024 target for the S&P 500, Goldman Sachs strategists increased their forecast as the year-end rally shows no signs of abating. Now they expect the Fed easing could lift the S&P to 5,100. Morgan Stanley's Mike Wilson says market sees no Fed policy error. This 5,100 target would represent 8% upside. This outcome aligns with the scenario we outlined last week, where lower inflation and dovish Fed policy allows real yields to fall. Our 3-month and 6-month targets are 4,800 and 4,900. Ryan Dietrich on X, he is the chief market strategist at the Carson Group. He says that more than 40% of the components in the S&P 500 hit an RSI of over 70 last week. An RSI above 70 signals overbought. He says, yes, we are super overbought, but we also see this type of action at the start of very strong moves. January of 1975, October of 1982, February of 1991, and July of 2020. And then now, up a year later, all 4 times, and up 25.7% on average. So yeah, I don't think the S&P is going to rally 25% next year, but oh boy, if it does, Tesla is probably going to be $500, I would imagine. Guru Focus continues to believe that Tesla's fair value is $453.18 per share, that the stock today is significantly undervalued. And I think that's exactly true. Based on what 2024 could have in store, the way that markets price in forward events, the way that interest rates have worked against Tesla for the last 2 years, no longer should be the case in 2024, as the odds of a recession, as per global investors, sit at about 40% next year. The odds of a re-election of an incumbent president during a re-election are basically zero. It's only ever happened one time in the last over 100 years. I think it's very incentivized to avoid a recession. Thus, I think a recession could be a bigger problem for 2025, or a bigger one maybe for 2026, but not right now. That means Tesla stock has quite a path for runway upside from here. As investors start to realize Tesla is probably a great place to be in 2024, well, you're going to see billions of dollars flow into Tesla. Match this with a retail base and very much FOMO-like activity around Tesla at times, with a short position of over $22 billion. You could make the argument that Tesla should already be in the mid-300s. Right now. Fed officials say rate cuts could be needed next year to prevent over-tightening. This is from the Bloomberg terminal. It says, well, this is from Mary Daly. She says Fed should aim to minimize job market disruptions if inflation keeps falling. More recent inflation declines have been demand-driven. Demand-driven inflation declines are a material development. She is flip-flopping 100% compared to what she just said a couple of months ago. Mary Daly said on October 10th that neutral interest rates could be higher than pre-pandemic. She also said on October 5th that progress is not victory, that they may need to raise rates further. So yeah, talk about a flip. Here is another take on this extremely bullish signal of broad-based breadth momentum that we have seen recently from Seth Golden on X. He says forward positive return rates, 3 months, 88%, 6 months, 85%, and 12 months, 94%. The median 12-month return is 13.5%. FX Evolution says check out the liquidity, especially since March of 2023. It's clear that central banks worldwide haven't exactly been restrictive. This echoes what we have seen on our daily show central bank indicators. And as you can see, liquidity starting to really ramp higher. Yardini Research has came out with this new piece titled "A Dozen Reasons to Remain Bullish in 2024. Whether you agree or disagree, doesn't matter, we're going to share it. Number one, interest rates are back to normal. You could argue maybe it's not normal in recent times, but over the last 50, 100 years, yeah, you're kind of getting back to normal here. Consumers have purchasing power. Households are wealthy and liquid. Demand for labor is strong. Onshoring boom is boosting capital spending. A lot of people are confused on what this means. Onshoring, like bringing jobs to the U.S., right? Incentivizing jobs in the U.S., that is called onshoring. Housing is all set for a recovery. There was really no decline there. Hopefully, that just means more people can afford to buy a home because rates are going lower. A couple of these don't make a whole lot of sense, but still. Corporate cash flow is at a record high. That's true. Inflation is turning out to be transitory. That is pretty true. The high-tech revolution is boosting productivity. Leading indicators are mostly misleading. The rest of the world's challenges should remain contained. I think that's a bold statement. The roaring 2020s will broaden the bull market. Another broad statement. On another note, a car has crashed into young Biden's parked motorcade in Wilmington, Delaware, leaving young Biden, quote, shocked. Apparently, it looks like the guy was a drunk driver. What a day to be a drunk driver, and my gosh, what are the odds of that? Tesla today had option activity from hedge funds and institutions of about $1 billion with a positive order value of 33%. This is comprised of 971 different trades. The volume, though, is notable, 63.33% to the call side and 36.67% to the put side. Now, volume on the call side can show up bullish or bearish. Bearish volume to the call side would be individuals selling calls, right? Collecting premium, selling calls. Bullish volume to the call side would be individuals buying calls. I don't think we're at a point where massive amounts of individuals are selling calls. So I would make the argument, statistically speaking, we're probably seeing a lot of bullish activity. Now, this is an aggregate number from hedge funds, institutions, retail investors, everyone. So you can make the argument that retail is pretty bullish today. Hedge funds and institutions are a little bit on the defensive side. The short position in Tesla currently stands at $22.4 billion with a short percentage of free flow at 3.25%. $22.5 billion is roughly the same amount worth of Tesla stock that Elon sold to fund his buyout of Twitter. So you could make the argument that look at the downside that caused. This could cause some pretty dramatic upside if Tesla stock does start to squeeze the shorts. We have a new quarterly record set today in Denmark where 210 Teslas were sold today alone. Tesla's Nordic investors push for a collective agreement. Quote, we are deeply concerned about the current conflict in Sweden and Tesla's attitude towards the right to collective agreements. 16 major Nordic investors recently sent a letter to Tesla urging the company to resolve the conflict with IF Metal. The one way to end the conflict with the Swedish union is to sign a collective agreement. They go on to say that they seek to meet with Tesla in early 2024. Lars says the Cybertruck basically floats. And if you're creative, you could figure out how to put an onboard motor plugged into your outlet, then turn it on from your screen and go boating. The Los Angeles County Sanitation District paid $1 million for 22 new Tesla Model 3s. The Sanitation District fleet managers said after incentives and rebates, the Model 3s were only $30,625 a piece. Quote, not only were they the best priced fleet vehicle, Tesla could guarantee a quick delivery. Legacy OEMs need to step up their game. We still have light duty vehicles that have been on order since July of 2022, yet to be delivered. He added, what did we learn taking delivery of our first Tesla Model 3 rear-wheel drive EVs? Number 1, efficiency ordering process. Number 2, no restricting ordering windows. Number 3, seamless communication. Fast delivery. He finished by saying, thanks Tesla for providing another option. Hopefully this motivates legacy OEMs to follow suit. Elon Musk responds and says, cool. Tomorrow morning, we will get some data coming out at 8:30 in the morning. The Canadian inflation rate year over year. It's expected at 2.9%. Last month was 3.1%. You're also going to get month-over-month numbers. Now, due to the proximity of Canada and the U.S., a lot of the shared economics that we do possess, it's our largest trade partner. If they see a big spike or big drop in inflation, that'll move the markets. But to be highlighted in red, expected to be a major volatility event, I don't think so, unless, again, we get a big move up or down. Now, tomorrow for the U.S., we are going to get building permits, preliminary numbers for November. We're expecting less building permits for November than we've seen for October to come in at 1.47 million. Now, think about it simply. More building permits means more building, which means more buildings being built, which means more houses being built, which means maybe more inventory down the line, which means maybe less inflationary pressures from housing. If we were seeing no inflation from housing right now, CPI would be negative. Core would be negative. That's why this could be important tomorrow. I doubt it's going to be the end-all be-all that sends stocks soaring or sends stocks crashing. I would highly doubt that. But it will help develop the narrative that maybe inflation will have a longer runway to continue to fall if more building is getting done. Our bigger data will be on Thursday with the GDP growth rate. The final numbers for Q3 expected at 5.2%. Also hard to argue we're heading into recession when we just had 5% GDP for Q3. But hey, who am I? Friday. We are going to get a lot of big data. This is hard data. Core PC price index month over month, durable goods orders month over month, personal income month over month, and personal spending month over month. As we get closer to Friday, we'll go over the estimates for all of these, what my estimates are, and how I think this could affect the markets. But I will say right now, I'm expecting these numbers to come in pretty Goldilocks. What that means is the best possible outcome, which means stocks should rally. A new Tesla service center will be open today in Ski, Norway, located close to Oslo in the south of the country. It is going to serve many in that area. Joe Tetmeyer posted this today on December 18th, 2023. At Giga Texas, we're seeing a lot more Cybertruck spottings. Just after his photo on the south end, almost all Cybertrucks were moved. 9 in the outbound lot. Several truckloads moved off-site this weekend, and more coming out of the factory. And here's a look at the images. Beautiful looking Cybertrucks, fresh off the assembly line. Futures are down right now for the NASDAQ, about 0.12%. S&P futures and Dow futures are matched at negative 0.05%. So tomorrow could be a little bit of sideways trading action, a little bit of risk off. I'm kind of expecting that at some point in the beginning of this week, heading into the data on Thursday and on Friday. Tesla stock was down about 0.5% today, down another 0.45% in after hours trading. As you can see, we hit a high of almost $259 per share. We got rejected. Now we're back to where we were basically on Friday, which no big deal. We got rejected. So what? We're probably going to trade sideways here. Now, if we do get downside, expect a lot of support coming in around 247 to 248. Now, I don't think we're actually going to break this downtrending line of support, which is now what I'm going to call it. It was the downtrending line of resistance, at least, again, from July. You're going to find a lot of support there. If you don't, you have a bigger problem on your hands. Odds are we trade sideways, then get another leg up above 260, possibly by Friday. That's my expectation because I think the data is going to favor more capital heading back into our markets, heading back into stocks like Tesla and small and mid-cap stocks. The big problem, really, if we just fundamentally want to boil this down, to why Tesla is not at all-time highs right now, why Tesla is at $250 per share, it's because this market has been starved of liquidity. There's been no liquidity. FundLee's manager, Tom Lee, or FundStrat's manager, Tom Lee, has said this many times. This market is just starved of liquidity. It's as simple as that. Liquidity is coming back into our markets, so valuations can go higher for certain names, specifically interest rate sensitive names, as capital comes off the sidelines. Let me know what you think about all of this information down below in the comment section. Hit the like button and subscribe to the channel if you made it to the end of this video. If you guys also want to come trade with us live in real time, come stay up to date, come get notified every time I make trades, come ask questions, join a trading community, link down below in the description of this video. We have been killing it over there. Absolutely blowing it out of the park. So come join us if you guys would like. Never a recommendation, never financial advice. You get the idea. There's a disclaimer when you join, but I think it's a great place to be. So thank you for watching. Enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.